Welcome back to Am I Catching a Falling Knife? I'm your host, Dave, and today we're tackling a big one, a real headline grabber. Coinbase Global Inc., ticker COIN. This stock has seen some serious turbulence lately, dropping a staggering 23.92% in just the last 10 days. Is it time to catch this falling knife, or should we let it hit the floor? Let's find out. The main narrative swirling around Coin is their recent mixed Q2 earnings report. They actually showed decent profit, which is good, but they missed revenue expectations. And why did that happen? Well, largely due to a dip in retail trading volumes. It seems fewer individual investors were making trades, which hits Coinbase's core business. However, it's not all doom and gloom. The company is strategically shifting gears, focusing more on institutional growth and building out an everything exchange model. Plus, we've got the ongoing saga of evolving regulatory clarity, which is a double-edged sword. It presents both opportunities and challenges for a crypto giant like Coinbase. So, who exactly is Coinbase Global Inc.? Well, it's a behemoth in the crypto world. Founded back in 2012, it's the largest US-based cryptocurrency exchange, and as of 2024, the world's biggest Bitcoin custodian. They operate in over 100 countries and manage a staggering $400 billion in assets. They cater to pretty much everyone: retail investors with their main app, Premium Coinbase One, and Coinbase Advanced for serious traders. For businesses and institutions, they've got Coinbase Business, Commerce for payments, Secure Custody, and Prime for institutional trading. Their revenue mostly comes from transaction fees on crypto trades, which makes up about 50.93% of their pie, with subscription and services revenue right behind at 43.73%. And overwhelmingly, their revenue, about 83.84% of it, comes from the United States. Now, how does this narrative impact the numbers? Let's break down how this Q2 earnings report might ripple through Coinbase's financials. So, the primary negative driver here is that declining retail trading volumes. That directly impacts their transaction revenue segment, which, as we just mentioned, is over half of their total revenue at 50.93%. Given that Q2 miss, we're projecting a continued 12.5% reduction in that transaction revenue for the upcoming quarter. When you crunch those numbers, that 12.5% hit on 50.93% of revenue translates to a negative 6.37% impact on total revenue. Ouch! But it's not all bad news. The narrative also talks about strategic shifts towards institutional growth and everything expansion. These initiatives, while still early, should give a boost to their subscription and services revenue segment, which is a significant 43.73% of their total. We're projecting a modest 2.5% growth in that area as these new strategies start to bear fruit. That 2.5% growth on 43.73% of revenue gives us a positive 1.09% impact on total revenue. So, when we combine the hit from retail trading and the boost from new strategies, the net estimated revenue change is a decline of about 5.28%. Now, here's where Coinbase's strong structure comes into play. They have a really high gross margin of 85%. What that means, in simple terms, is that they're very efficient. This high margin indicates significant operating leverage. So, a percentage change in revenue will often result in a magnified percentage change in earnings, because their costs don't increase proportionally with revenue. Assuming an operating leverage factor of 1.5x, we estimate the earnings impact to be around a negative 7.92%, or roughly negative 7%. Our confidence interval on this is a bit wide, ranging from a negative 13% to a negative 3%, and that's because crypto markets are inherently volatile, the pace of new strategic initiatives is uncertain, and regulatory clarity is still a moving target. All right, so with that earnings impact in mind, what's this stock really worth? To figure this out, using data I pulled from finviz.com, I did a discounted cash flow, or DCF evaluation. For this, we're assuming an EPS growth rate of negative 2.87% over the next 5 years, a discount rate of 9.5% to factor in the time value of money, and a terminal growth rate of 2.5% after that. With these assumptions, our base case DCF value came in at about $119.75. Then, when we apply the negative impact of our narrative, that negative 7.9% earnings hit we just talked about, our narrative case DCF value drops to approximately $104.18. Coinbase usually trades at a bit of a premium above its fair value. Given this, if you're looking for potential entry points for Coin, we've identified some custom buy levels to consider if this falling knife keeps dropping: $200, $190, and $170. These are points where the valuation might start to look more attractive. So that wraps up our deep dive into Coinbase. Now, as always, the information shared here is for educational and entertainment purposes only. Consult with a qualified financial advisor and consider your personal financial situation before making any investment decisions. Thanks for tuning in, and I'll catch you next time.